for attending. So as Adrian mentioned, we've spent 2 webinars so far talking about 19 ways to get paid. We actually covered all but the last 6 we're going to go through today. Just want to remind everybody, if you happen to have missed the first 2, those are recorded. Adrian can get you those after the presentation, because they kind of are the foundation for where we're at today with the webinar and the reporting and the alerting. We'll try to tie it all together here so you get a complete picture with the presentation today. So let's get started. This is what we went through before. The first 7 items we went through were workflow and processes, things that we're able to do to automate accounts receivable from that standpoint. We then talked on July 19th about customer communications, and today we're going to wrap it up with really reports and alerts, things around management reports, reports and alerts on disputes and escalations. We're going to spend a good chunk of today on that. AR analytics, credit management, alerts and notifications, as well as third-party communication, keeping everybody in the loop on what's happening. Oh, let me go back up because I have a hyperlink to part 3. It's my little shortcut here. So picking up where we left off last time, we're going to talk a little bit about automated management reports. And I want you guys to think about this today. So a lot of companies, number one, don't do a lot of reporting around AR other than printing out an aging report and trying to figure out who has their money and what's being done to collect it. There really are no reports out of a standard ERP system that go much beyond that. So what you're faced with, and what most of our customers are faced with when they come to us, is that they don't even know where to start, right? They may have some data that they're storing in a spreadsheet somewhere, number of calls that they're making, that they might be storing stuff in a Word document, but there really is no picture of what's being done to collect on the accounts receivable. So how long does it take you to create those reports today? Probably a long time, because you're working with data that's in disparate systems. It's really not organized data. And to be frank, there's really no accountability for getting the data to begin with. Are the reports easy to create every time? Probably not. There's probably a lot of inconsistencies in the way that information is gathered. And how much time could you save by having a system to be able to organize this information? Probably quite a bit. Now, what kinds of information does management need? They need to know things like, what's the status of our on-hold accounts? Are we making progress toward resolving a dispute, or making them happy to where they're going to make a payment? Where are the accounts that we've placed with the collection agencies that we work with? What's being done? What has transpired to get them to collect? When do we need to engage with legal counsel? And kind of what's the status of those more severe issues that we're trying to manage? Who has my money? Who has the majority of my money? Which accounts really should we be focusing our attention on? What's being done to collect it? How many phone calls have we made? How many emails have we sent? How are we doing? Are we getting paid faster? Are our customers starting to pay us slower? Is this maybe a certain segment of our customer base that we're having problems with? What's our expected cash receipts? That's pretty critical. That's going to shift and fluctuate over time. But we need to understand that, because it's going to impact a lot of the decisions we make in our business. And fundamentally, where are our credit risks, right? Where do we have the potential for things to go really, really bad? The management needs to be aware. We have these 5 customers. They're kind of a higher credit risk. They're breaking promises to pay. They have a lot more disputes than they used to. And oh, by the way, we just now sold them a $50,000 piece of equipment or $50,000 worth of services that has a lot of risk attached to it. Number 15, automated disputes and escalations. Hopefully your dispute management does not look like the shadow figures here. But disputes, they're going to occur no matter what happens, no matter what we try to do to prevent them from happening. The key here, and if we remember back to the last few presentations that we did, we need to be very proactive early on. The minute that we see that there's a potential problem, we need to make a call to the customer. We need to talk to them about why they're not paying. And a lot of times it's going to be a dispute. Some of those reasons for the dispute are going to be our fault. We didn't send them the invoice on time. There was a problem with the invoice. We shipped them the wrong product. It was damaged in shipping. They had a question about our billable rate. They were tax exempt. We charged them tax. They didn't have a PO number on the invoice. There's all these things we've talked about that can cause a dispute. So we need to be very proactive to understand what those are up front so we can resolve them, because the longer that an invoice goes unpaid, the less likely we are to be paid, or at least paid in full. Again, things we've talked about in the past. So what do we need from a reporting and analytics standpoint? We need to know which invoices are in dispute, right? That's kind of critical, the first thing that we need to understand. We need to understand why we are having disputes to begin with. If we're continuing to have disputes because the customers don't understand our invoice, then maybe we need to go back and revise our invoice format. If we're getting invoice disputes because we're shipping the wrong product, root cause analysis will tell us that we need to go back and look at our process in shipping. Could be, we're not including the purchase order on the invoice and they're not going to pay us without it. We need to go back and do root cause analysis, find out if there are 100 invoices a year that are in dispute because of that reason. Let's find a way to ensure that that stops occurring. So being able to code things and report on them so that we understand where the problems are, so we can do the root cause, go back in and fix the root cause. Not just fix the issue at hand, but make sure it doesn't happen again. In a lot of cases with disputes or other types of issues, we need to escalate things very easily to upper level management or to even people outside of the organization. So for example, I have a customer, they're telling me that they're not going to pay because the sales rep quoted them a different price than what they saw on the invoice. Well, who do I need to escalate this to, right? I don't have that information. I need to escalate to some extent, maybe to the sales rep, maybe to their manager, the VP of sales, to try to get some resolution on this. I have a customer that maybe they're not necessarily disputing, but maybe they're telling me that they are having cash flow problems and that they cannot pay their bill on time. It is not within my authority to set up a payment plan or to renegotiate a contract. Maybe I need to escalate that to my supervisor or the CFO to be able to have those types of discussions. So these are all the things that we need to report on around disputes and make sure that all that information carries forward with that, which we can do obviously within our software. Can accounts and credit issues be automatically assigned to staff based on a code or severity? This again goes back to reporting. So maybe I have somebody that only handles any dispute related to freight, right? They're the ones that are working with our shipping providers or our third-party logistics organizations, or maybe they're the ones that have a specialty within those types of areas within the business. So we can escalate things and have different reports based on severity codes related to an invoice dispute. Can management clearly see credit risk associated with open disputes and high priority issues? Again, we need to be able to tie all this information together, be able to look at the credit scores and other information such as broken promises, open disputes, maybe the length of how long it's taking that customer to pay us. And just to close here on this slide, most companies have no insight whatsoever into invoice disputes, let alone any way to segregate them from other credit collection issues. And most companies have no way to manage the escalation process, which is typically a very manual process and very prone to errors. The importance of monitoring larger accounts. This was a recent study that I found that was pretty interesting. This is from a Bloomberg article. If you Google it, you'll find it. And it suggested that many large companies are starting to pay vendors later than they did just a few years ago. We've heard about this in a lot of industries through the years. It used to be General Motors would pay you whenever they felt like it. Walmart would give you, a bunch of disputes on invoices to delay the process, whether it was intentional or not. Either way, it delayed the fact that you were going to get paid. But according to this report, some of these companies, Macy's, Amazon, Walmart, Procter & Gamble, Mondelez, and Kimberly-Clark, among many others, are kind of practicing this, or at least it's been alluded that they're practicing this kind of cash flow management. In fact, there was one company in this study called InBev, which is a division of Anheuser-Busch, that was reported to have average days payable of 280 days. Now, I guarantee you there aren't many people in the world that are extending net 280 terms to customers. My main point on this is not to point out that the big companies are bad. There's certainly a lot of opportunity for selling to a big company. But what this means is that we need reporting. We need to be able to stay on top of what's happening at these accounts. The last thing we want is for a dispute or anything else to get in the way of them making a payment closer to on time. Okay, they're probably never going to pay us on time, but we want to get closer to on time. I think I may have shared this in the previous presentations, but it's worth reiterating. The longer that an invoice goes unpaid, the less likely that we will ever get paid, or at least paid in full. These were based on some older Census Bureau information. I think they probably hold true today, although I haven't seen any recent studies, but generally speaking, they're going to be probably pretty accurate. If you have an invoice that's aged to about 3 months, that's pretty old. What's transpired in that amount of time? You've forgotten a lot of the kind of circumstances around the dispute. Maybe you even have people that were involved in the purchase or the sale of that product or service that are no longer available, whether they're on vacation or they're no longer with the company or they got promoted into another area of the business. So what's going to happen here is those invoices at 3 months, about 26% of them, or at least 26% of the amount, is going to be uncollectible. And that's not good. So we need to be very proactive on the front end. And heaven forbid those invoices age to 6 months, where we'll be lucky to get about 30% of the revenue. And if they age out to about 12 months, we might collect about 10%. So just some observations here. You guys can draw the same conclusions I can. It's not like I'm that much smarter. In fact, I'm not. It's very vital to be proactive early in the process. Many of your late payments are going to be directly related to disputes. You have to identify them, isolate them, resolve them at any cost. Invoices at age should be escalated to management for resolution before they get to that 3-month period, for sure. The time to consider placement with a third-party collection agency or legal counsel may be right around that 3 to 6 month time frame, when there's still a pretty good opportunity to collect at least some of that money. And invoice disputes almost always result in significant delays in payments, so let's try to do everything we can to prevent them from occurring. There are probably 80 keys to effectively managing disputes, but I've come up with 7 that I think are more key than others. The first is identify it early. Handle them differently. Disputes are their own animal. They're very different than a customer that needs more information, than a customer that wants to talk about extending their credit limit or changing their credit terms. It requires a lot more attention. It's a lot more work. So make sure you handle them differently. Use dispute reason codes to be able to identify why you have disputes. Document everything that you've done. This is critical. Every conversation you've had, every interaction with the customer needs to be well documented. Get all the information that you need from all parties involved, whether it's shipping or sales, really anybody. Escalate it at the right time to the right person, and part of that can be handled with software or process. You can also manage this manually if you have a really good process in place and really good people that are properly trained. again, get down to that root cause analysis because we don't want to waste a lot of time if we're continuing to fix problems related to shipments. Let's go back and fix the root cause. Maybe we just need to change our packaging. Maybe we just need to change the provider that we use for shipments. Gain insights into metrics such as time to resolution. Most companies have no idea how long it takes them to resolve a dispute. So try to get some way, some system to be able to gain some insights into how long it's taking today, and then set some goals. I want to reduce the time it takes me to resolve a dispute from 30 days down to 15 days, and I want to do that over the next 12 months. Make sure it's time sensitive, time framed, something that's also achievable and realistic. Automated AR analytics and reports, and this one's pretty easy. I'm a big fan of the KISS principle, where I keep it simple, stupid. There's really two metrics that I like that tell me if I'm doing a good job in AR, and that's average days late or days sales outstanding. Now, I tend to like average days late better. I'm going to tell you why. So days sales outstanding, for you non-accounting people on the call today, is basically a fancy word for how long on average does it take my customers to pay me. Well, if my average credit terms with customers are net 30, my DSO is never going to be under 30. I mean, let's face it, customers are never, on average, going to pay me faster than the terms I'm extending to them. So to me, that's flawed. The other thing that's flawed with that is that most businesses don't have one standard set of credit terms. They'll have some customers that are net 30. They might have others that are net 15. They might have others that they get discounts. Maybe it's a 2% net 10. They might have special promos even within customers where you buy a certain amount in this period of time. We're going to give you net 60. What I really care about is, are my customers paying me on time? And that's going to depend on the terms at the invoice level. So 0 is my ideal. I want them to pay me when I told them the invoice was due. Okay? And that's your average days late. So that's the metric that I really would focus on to start with, and then there's certainly more you can add later on. Once you get that average days late nailed down, here's 22 more if you want to knock yourself out some more reports and metrics that you could potentially implement. Projected cash receipts based on your customer payment history. The customer typically pays a $10,000 invoice 10 days late. Invoice that's open in the system for about that amount is due today. Statistically, I can project they're going to pay me in 10 days from now. And I'm going to do that across all the invoices that I have open and across all my customers. To get to that level of information can be very difficult. We can do that with our software. There are other applications on the market as well. Looking at your account aging by segment, being able to understand if maybe there's a territory, a product line, or maybe a sales rep, some fluctuation there so you can maybe focus on a particular segment of your customer base. Credit collection activities and efficiencies, being able to analyze, report, and define metrics on this. How many calls do I need to make? How many calls do I make before I actually talk to somebody? From my collector's standpoint, which ones have the lower average days late? Can we learn something by them, implement best practices, do some cross-training? Looking at average days late or DSO by the size of the invoice, because that's obviously going to impact things as well. I may have customers that are going to pay the small dollar invoices much faster because, well, they're not as much money and they're having cash flow problems, or maybe it's the opposite. Maybe they're paying the large dollar invoices faster because they know those are the ones I'm calling on all the time, and I never get around to calling on the low dollar invoices. Disputes by reason code, collection forecast accuracy by credit rep, accounts on hold, top delinquent accounts, oldest open invoices by amount, customers due for a credit review, new customer emails and requests. These, again, are all metrics and reports we should or could be looking at. bounced and undeliverable emails. That's a pretty key one, right? We need to be able to communicate effectively with our customers. And if somebody is left, if they're my only contact, that's a pretty big problem. Invoices missing the PO, first time we've ever invoiced the customer. And this is the key one. I probably should have made this one in bold. So 9 times out of 10, if there's going to be a problem with non-payment, it's probably because it's the first time that we've ever done business with this customer. I'm going to tell you why. We've set the customer up wrong. Sales rep gave us the wrong information. The invoice was sent to corporate when it should have went to the subsidiary or vice versa. We're not set up in their system, so that's going to delay things. They need their purchase order on the invoice or they won't make a payment. There's a million things that can go wrong the first time that we bill a customer. So as a best practice, I highly recommend the first time that you invoice any customer that you call them. If nothing else, call them and say, did you get the invoice? Was there any issues with it? Do you see any reason why you wouldn't make a payment on time? I'm your credit rep. You can contact me in the future if you have any questions whatsoever. Our terms are net 30, net 15, what have you. If you don't pay on time, that's fine. I will be calling you to find out why. So you're kind of building that relationship, setting the expectations. But the only way you can do that is if you have some way to report on it to know that that, in fact, was the first time that you billed or invoiced that customer. Some other things that you may want to report on: the number of past due invoices by account, total past due by account, your high-risk customers that have a late balance, customers that are late that have no collection activity. All right, that's pretty key. Aging by sales rep, so you can find out maybe if it's not a customer problem, maybe it's a sales rep problem. Average days late versus average days to pay by sales rep. Number of disputes by customer and number of broken promises. These are all good things that you should have at your fingertips. Automated credit. And there's some things you can't automate in credit, things like integration into credit bureaus to be able to pull or push credit data. You can also use certain systems to create internal formulas for credit scoring instead of having to calculate those manually. Just giving you a place to put credit report documents, where to store them, or maybe some of the data and using them to be able to do some filters and selects. What about all the supporting documents that you need? Could be trade credit references, could be, I don't know, it could be all kinds of different things that could be, personal references, could be applications for changes to credit limit or the credit terms. You also need things like your trade references, your banks and lenders, other vendors you're going to be reviewing. At the end of the day, you want to be able to use all this information to minimize your credit risk, understand the appropriate credit limits and terms to extend to customers based on where they fall. A couple other things you can do here with automated credit management in respect to reporting and alerting. First of all is keep it all centralized so you have everything in one place. Automate the credit scoring process as much as possible. Automate the notifications. So if you have customers that are high risk, you want to know about any issues that might be related to them. Find out which accounts are due for a credit review. Again, very specifically, any of your high-risk customers, you should be monitoring them monthly, quarterly, at an absolute minimum. Automate requests for changes to their credit. Understand what their cost of credit is. And when I say cost of credit, this is the amount of money they're costing you above and beyond their agreed-upon credit terms. And then understanding what accounts are on credit hold, what's the impact to my customer and to my relationship with the customer, what's the impact to my bottom line as well, because when they're on credit hold, I can't sell them anything. Alerts and notifications. So I'm going to go back to something we talked about in an earlier presentation, and that's the Pareto principle. So let's use an example here. Let's say that I have 1,000 customers, and I'm one person in my AR department, and I can't possibly manage all 1,000. I don't have to. Pareto principle tells us that 80% of our revenue comes from 20% of our customers. That means that 80% of my problems are probably related to 20% of my customers. So let's do this. Let's take those 20% of the customers, that's 200 accounts, that I can probably manage effectively. And I am going to be very hands-on with those accounts. I'm going to email them. I'm going to monitor them. I'm going to do whatever I can to make sure that 80% of my revenue for those customers is coming in. I'm then going to leverage a system to handle the other 80% of my customers, which is 20% of my revenue, okay? But I don't want to take my eye off the ball completely. What I really want is management by exception. I want reporting and alerting on those 80% of my customers to tell me if there's a problem that should be escalated to me to review. What do I need from a management by exception on those other 800 accounts? I need to know, is there a high dollar dispute? If so, let me know. Are there late customers that have, a balance due of over a certain amount, 10,000, or over 60 days past due that we're getting to that critical stage? That's when I'm going to insert myself into the process. Do I have customers on hold or that have just been put on hold? Do I have customers that have just made an online payment? Certainly I want to keep my eye on that. I want to also look at the projected cash receipts for those customers. And if I expect $20,000 next week from them, I can go in and find out very quickly, did I get $20,000 for those customers? And if I didn't, did I get more? Did I get less? If I got less, then why? Right? So a lot of this is just alerting to give me information so I can focus where my attention really should be, and that is on my more strategic and high-risk accounts. Automated third-party communication. In a lot of scenarios, you're dealing with people outside your organization. I'm going to use a couple examples here. So there will be cases where you have to turn customers over to third-party collections. And we can use reporting and alerting to help facilitate this. So you can do this manually. Within our software, it becomes very easy. I could set up my collection agency as a user within the software and simply reassign the accounts or those invoices to them. They can log in and get all the information. Or I could set them up as an inquiry user and then have any accounts that have been placed with them trigger an email notice to go out to them with the spreadsheet of all the information. So there's multiple ways that we can integrate our third-party collections into the process. Legal counsel is the same thing, whether you're a large organization and you have in-house legal counsel, or maybe you're working with an outside legal firm, if nothing else for demand letters. We can do the same thing within the software, or you could potentially do it manually. Come with reports and alerts of the customers that are now due for a demand letter, or the customers that, heaven forbid, we do actually need to go and take further legal action with. Last but not least over here, and there are other examples of how you would integrate other third parties, would be your accountants and bookkeepers that may not be in-house. A lot of cases, you may have a bookkeeper that's doing some credit collections function within your organization, but they are outsourced, so being able to give them the information they need to be effective. So those are the 19 things that we covered. I want to talk about a few more things before we wrap up for the day. We have a boatload of other resources out on our website at anytimecollect.com. If you go to the website, you'll find a resource tab. You'll see a PDF. It has a lot of links to it, to documents, product information, videos, white papers, success stories, just tips and tricks on what you can do to better manage your accounts receivable. So I encourage you to take a look at that. And also contact Adrian and ERP VAR to get the links for the first two parts of this presentation to get really the complete picture of everything that we've gone through today. So with that, I want to kick it over to Adrian for Q&A, and we'll wrap up for the day.
Thank you, Jim. Great presentation. We have a few questions here. First question is, which accounting systems have you worked with, and what's the process of getting started?
Yep, good question. So we work with a lot of different accounting systems. So on the low end of the market, we integrate with QuickBooks, with Sage 50 being the Peachtree product. In the mid-market, we integrate with most of the Sage ERP products, Sage 100, Mass 90, Mass 500, Sage 100, Sage 300, ACPAC, X3. You get into the Microsoft Dynamics product lines, GP, NAV, AX. We have customers that are using it on Solomon or SL. We do integrate with Epicor out of the box as well. And then for anyone else, any other products out there, we have a number of ways to integrate. We integrate either via direct to SQL or CSV flat files. And those integrations have been completed for various products. Most of the Infor products we have customers on, like SX Enterprise, Sightline, SAP, Oracle. We have companies on Macola. We have companies on very vertical ERP applications in legal industry or what have you. So for the most part, we can integrate to just about everything. As far as the implementation process goes, it really is going to depend on the addition of the products. We do have various levels of complexity. For the majority of the companies that we work with, they're going to be a good fit for probably our Express Edition. Express Edition takes pretty much no time at all. You fill out a survey, you send it to us, we set up the application, and you're done. You're ready to rock and roll. If you want to take that a little bit up market, and you want to have a little bit more complexity, maybe more users, you'd be looking at our Standard Edition, and the implementation process will take a little more time, probably 16, 24 hours. And then for really, really large companies, we've actually spent 60 to 80 hours on average on a very sophisticated implementation. So it's really going to depend. But again, the majority of our customers these days are going with the Express Edition, which is set up in literally a couple hours.
And do you have a partner program?
We do. In fact, we get a lot of leads with partners. We've been a channel-driven organization for a very long time. So there are various options there, whether you want to get certified, whether you actually want to go out and resell and focus on it, or whether you just want to do a referral. And the margins are going to vary depending. Could be anywhere between 10 and 30%, typically on average. So if you do have an interest in the partner program, contact me. I'll put you in touch with Adam Lynch within an organization, and Adam could talk to you more about the specifics of the partner program.
And Jim, could you review the pricing again?
Sure. So it's kind of complicated because we make it too easy. You have the option to buy the product or subscribe to it. Okay. On the purchase side, it starts at $2,500 per named user. That is our Standard Edition, plus your annual maintenance support contract on top of that, plus your services. Our Enterprise Edition allows you to install on-premise, has some more advanced features. That is $5,000 per user, plus your annual maintenance support, plus your implementation services. The majority of our customers these days are going with our subscription. So instead of buying the product outright and paying the maintenance support, they're simply subscribing to it by user. And at our Express Edition, that is $120 per month, which is pretty affordable. You actually get a break on that at $100 per month if you pay the year in advance. And that's it. You get up to our Standard Edition, and that's $150 per user per month, plus your implementation, but your maintenance support contract is included. You go to our Enterprise Edition on subscription, and it's $300 per user per month. So that's the way the pricing is today. And of course, those are our customer pricing. So if you are a reseller, contact us. There is some margin built in there for you as well.
And I'm not seeing any other questions at this time. I just wanted to remind everybody that there's a question mark next to your name on the webinar pane. If you should have any questions, please don't be shy and go ahead and click on that button and click and key in your question, and I will announce your question for Jim to answer. It looks like we are 7 minutes over time, and we really appreciate everybody's time. This was a quick session to cover those last 6 points. And thank you so much for spending that time with us. Jim, would you like to offer any closing comments?
No, I think the only closing comment, I say it all the time, is I don't care if you buy our software or not. I mean, obviously I do. I'd love to work with everybody because I think that we have a pretty good product, actually an excellent product that can save you a lot of headache and help you get paid faster. But even if you don't buy our software, hopefully you got something out of this that you're going to go back and be able to implement in your business. Software is only a tool to help us get to where we want to go. The key is the people and focusing on trying to drive improvements in our organizations. So go back, take a look at these. Don't make it a waste of time. You took the time out today to sit in on the presentation. Let's go do something about it and try to impact our businesses in a very positive way. And the only other thing I'll leave you with is, if you guys have questions whatsoever, I don't even care if it's about the software, if it's just about best practices in AR management, give us a call. I'm happy to help you out. That's kind of what we do here. We're big on relationships and just trying to help companies be better. So that's really all I had, Adrienne, and hope to see everybody on a webinar here in the future.
Perfect. And just to remind everybody, I will be sending out a follow-up email with Jim's contact information and the recording. And Jim, any slides you want to send me or any other like white papers I think we've had handy where we can include that in the email and a link just to be helpful and educational to the audience, because there's so many caveats when it comes to collections, and you guys definitely are the experts in this area, so you have so much insight to offer. Even if people don't purchase your software, it's nice to be able to review your materials.
Absolutely.
All right, everybody. Well, thank you so much. Have a fantastic day. Take care.
Excellent. Take care.